The majority of human population, the majority of all the rare earth metals, the majority of all of the soft and hard commodities, and the majority of all the precious metals, not to mention oil and natural gas. It's a situation that is growing rapidly of telling any of us what's happening. And this infrastructure is becoming very impressive. And everyone says, the naysayers, very smart people, will say, well, the bond market, this and the bond, they don't have a bond market. Who's going to trust them? Who trusts us anymore? And our bonds, which have been horrible, no one wants anymore. So instead they sell bonds and they buy gold, which has no counterparty liability, which has outperformed the bond market, which has a 5,000-year history of being wealth. And the debt of a country in the form of a bond has about that big of a historical precedent of being money or wealth. So this is all happening right out from underneath us. And the thing that scares me, my man, more than anything else is that, and I don't mean to sound conceited or bigger-headed than I need to be, and that is that it freaks me out that I've been right about all this stuff and the speed at which it's accelerating. If this doesn't wake people up.
The silver market is poised at a pivotal moment as intricate global financial maneuvers begin to reshape its long-standing pricing mechanisms. For years, mechanisms like rehypothecation have allowed markets such as the COMEX to offer contracts for precious metals far beyond the actual physical supply, a practice that kept prices artificially low. This financial sleight of hand is increasingly under scrutiny as major emerging economies, notably India and China, start to demand physical delivery of metals, exposing the thin reserves backing such contracts. The shift is significant, signaling a potential end to the West's ability to suppress silver prices through paper trading. Amid these market dynamics, there's a growing momentum among countries within the Brics group, Brazil, Russia, India, China, and South Africa, to reduce their dependency on the US dollar. These nations are incrementally moving towards trading commodities using their own currencies, thereby sidestepping the traditional dollar-centric trading system. This strategy is not only a hedge against U.S. economic influence, but also a foundational step towards creating a more multipolar economic world order. Such moves are indicative of a broader disillusionment with the current global financial system, particularly in how the U.S. and its allies use economic levers as tools of foreign policy. In parallel, there are whispers of a new currency on the horizon, potentially introduced by the Brics nations. This currency could be pegged to a basket of commodities and national currencies, directly challenging the dollar's supremacy in global trade. The implications of such a development are profound, as it could lead to the establishment of independent price-setting mechanisms free from Western influence. This would enable producing countries to assert greater control over the valuation of their resources, shifting the economic balance of power. Now we'll show you more clips of Schectman, but fist-like, subscribe, and turn on notifications so you do not miss out on our daily videos. Enjoy the episode.
Are for sale, backing the contracts that are rehypothecated by a factor of 15, 16, 1700%. And yet India has bought, and now with this, almost 20 times that amount. So this is a country that understands what is happening. They understand that the West is using the leverage of the COMEX and the LBMA to control prices, and they're using it against us. When the COMEX was designed all these years ago, in 74, right after, the day after President Ford allowed gold to be made legal again, they needed to control the price. So they came up with the system. And the system was, we'll create fake gold and fake money to buy it. What I mean by that is that they rehypothecate. As I mentioned, right now, silver is rehypothecated like 1,700%, and gold's a little bit less than that. But the point of it is that what they do is, back then especially, you first have to understand that no one really ever stood for delivery. 1% of the contracts issued would stand for delivery. It was used to hedge exposure for producers and farmers and all sorts of things where you would, hedge wheat when you plant a field in April and hedge its production into September when it's harvested. When the farmer or the baker can buy the contract in September with a guaranteed price, and the farmer can sell a contract in April for delivery in September for a guaranteed price, and everyone wins. And anyways, but in terms of gold and silver, it was, they didn't want to let it get out of control. It was after the London gold pool, so they didn't want to let it get out of control because it signals the weakness in the system. So the system that they would create would be like this. When I say fake gold and fake money, like if I have $100,000 in my margin account right now, it costs about $8,000 in my margin account in order to buy a 100-ounce gold contract. Now, I don't have to spend that $8,000. It just has to sit in that margin account. And if the price doesn't go against me, I never pay for it. The trade itself, or unless I take delivery, the trade itself is, a few bucks, just like any trade. But the margin account is what allows me to control the silver and the gold. So gold in this case. So if the COMEX says, look, we can sell that one contract 100 times to 100 different people. No one ever takes possession of it anyway. They'll pay us for it. We'll say, okay, you own it. They're never going to take possession of it. And all you got to do to pay for it is have money in your margin account. So they don't even have to pay for it. It will create all of this volume in contracts that allows us to control the price. No one ever stood for delivery, but that's changing now, you see, and the suppression through rehypothecation or manipulation of the contracts is ending because you're having all of the countries say, thank you. I appreciate that. See, because now India and China are not third world. They're industrialized, rich, and savvy. And they're saying, wonderful, thank you so much. I'll stand for delivery. And the LBMA has about the lowest amount of silver they've ever had, on hand. The COMEX is watching 400 million plus ounces be bled out over the last 2 years. And the whole system is being bled dry using the suppression of the West. I want to read to you something to prove that they understand this. This is something that I've said on your show a gazillion times over the last year plus about how that they're going to issue a Brics common currency at some point, and that it will be pegged to a basket of currencies and a basket of commodities. We've said that. Sergei Glaziev has told us that for 3 years. I've said it on 1,000+ podcasts, and it will happen. Didn't happen in August, might not happen in October. Maybe it will, the October meeting in Russia, but it will happen eventually. Until then, what they've been doing, by the way, just to digress for a moment, they trade with their local currencies instead of using dollar to settle. China just canceled huge amount of thousands of tons of wheat from Australia and the United States. They're now buying it from
In today's market recap, Indian silver imports surge to record levels. Indians are known to have a love affair with gold. India ranks as the #2 gold-consuming country in the world behind only China. But Indians are also pretty fond of silver. In fact, India is the world's biggest silver consumer. Silver imports skyrocketed by 260% in February, hitting a record high of 2,295 tons. That was up from 637 tons in January, according to a report in the Economic Times of India. The Times said this surge in Indian silver buying could support global prices trading near their highest in 3 years. To put the import surge into perspective, India imported 3,225 tons for all of 2023. Indian imports are cyclical in nature. In 1 year, imports may be very high, and then the following year they may fall. Since imports fell in 2023 after record buying in 2022, we can expect imports to pick up in 2024. Industrial silver demand is projected to rise 8% to a record 632 million ounces this year, pushing overall offtake to near record levels. According to the Silver Institute, investment in photovoltaics, power grid, and 5G networks, growth in consumer electronics, and rising vehicle production all helped drive industrial demand higher. On the supply side, global mined silver is anticipated to fall by 2% year on year to 820 million ounces, driven by lower output output from operations in Mexico and Peru. Silver isn't priced for these supply and demand dynamics. This could present a great investment opportunity. Now we'll show you the best clips of the latest interview. Hit the like button, smash the subscribe button, and turn on notifications so you do not miss out our daily videos. Enjoy the episode.
Don't align with them, they'll take it from you, and they'll confiscate it if we don't align ideologically. So much so that they've just developed the Brics grain exchange, where, before I finish on what I was going to say, the one thing they say about the Brics grain exchange is that global prices are determined by the Chicago Commodity Exchange. Moscow and China seek to move away from trading grain for U.S. dollars in favor of the national currencies of Brics member states. Well, China just canceled these massive contracts last week with Australia and the U.S. farmers, buying it from Russia, buying it from corn and soybeans from Brazil instead of the U.S., paying in yuan instead of U.S. dollars. And then those countries, instead of stockpiling those currencies, which would have been dollars, they switch it into gold on the Shanghai Exchange, take possession instead of buying treasuries. This is happening right out from underneath us. But to prove they know what's going on, I'm going to read to you something. So there was an article that came out. Another finance minister, a Kremlin aide named Yuri Ushakov, came out and he said, look, we are indeed developing a currency. And the idea of the currency is that there will be two baskets. One basket of national currencies of the countries involved, one basket of commodities. And of course, they mentioned that it will be digital, in the digital form, which means it can be used without the banking system, just like the Project M Bridge that they developed, which we just saw the first ever cross-border payment for gold using the digital yuan. It sidesteps the SWIFT. They can go and not be, have to go through the intermediary banks of the West. They can go right on Project M Bridge, trade their digital currencies with another currency to buy the commodity and accept digital yuan. So in any case, or any of these digital currencies. So in any case, here's what he says. So we know, we've talked about a basket of currencies and a basket of commodities. That's nothing new. But how about this? And I've been saying this for 3 years, and it's coming, and you can see they know it. Second part is price. For the moment, price is determined by Western speculation. For the moment, price is determined by Western speculation. We produce all of these commodities and we consume them. I mean, China produces more gold than anyone in the world, and they're the largest accumulators of it, right next to India. And so, we produce, we consume, yet we do not have the ability but we do not have our own price mechanism, which will balance supply and demand. Now, let me stop there for a minute. What did I tell you about the way the COMEX was designed? If it were done one-to-one, supply demand would be balanced. But instead of doing it one-to-one, they rehypothecate the shit out of it, over leverage it, create more and more and more and more contracts to control and suppress the price, right? It's not one-to-one. The rehypothecation right now in silver is like 1,700%, not one-to-one. So we produce, we consume, but we do not have our own price mechanism, which will balance supply and demand. During the COVID panic, the price of oil fell to nearly zero. Now, as I've said on 12 podcasts this week, we know that's wrong. It went to negative $40 a barrel because all the tankers were loaded with oil. During COVID, they couldn't get into the ports, so no one wanted it. How about we'll pay you $40 a barrel? This is what happens when the futures control the price. The speculators, the gamblers, they create distortions. So he says it fell to nearly zero. He's wrong there. It was negative 40. But he goes on to say it's impossible to make any strategic planning for economic development if you do not control prices of basic commodities. Here's where it gets good. Price formation with this new currency should get rid of Western exchanges of commodities. Read that one more time. Price formation with this new currency should get rid of Western exchanges of commodities. So they understand what we're doing. They understand that we are suppressing the price of gold and silver, but they're using it against us. And I've been saying that forever. Like Jiu-Jitsu, you use your opponent's leverage against them. They are using the suppression of the Western paper market to drain the COMEX, to drain the LBMA, to drain everything. And now, after they've been very effective at that, now they're doing arbitrage, where they're turning up the heat, where the price of gold and silver are priced much higher in Shanghai, $3 higher on silver, and it opened up 7% limit up on Monday. Didn't do that here. So they're pricing it higher there to attract the traders who have access to all three platforms, Shanghai, LBMA, and COMEX, and to buy on the West and deliver to the East for a premium. That shit ain't ever coming back. Never. And they are slowly, methodically doing it the right way. And I always say logarithmic decay. That's going to be the next tattoo, little by little, then all at once. Well, that's what they're doing. Little by little, by little, by little, then boom, all at once. So when we talk about India importing all of this silver using the suppression of the brain dead West, they know it. And they know that at some point, no one will be stupid enough to trust the Western price and deliver at those stupid prices. And that's when, boom, the COMEX and the LBMA bust. And that's when the new price is set on a cash and carry basis in Moscow, in Dubai, and in Shanghai, and other parts of the world that accumulate and produce and respect these commodities for what they should be. And it won't just be precious metals. It'll be commodities or soft commodities like corn, like wheat, like the new Brics grain exchange. But how about the fact that they own the LME, the London Metals Exchange, which isn't precious metals, it's base metals, steel, copper, aluminum, zinc, nickel, all that stuff, right? So they own it. They own it. And now they want to start putting the warehousing of all of these metals traded in London on the LME in China. Do you see a problem here? Do you see what they're doing? They're going to buy up all the grain and all the wheat and all the corn and the soybeans. They're buying all the base metals, the copper, the aluminum, the steel, the zinc. They're buying all the precious metals. They're going into Africa. They're going into South America through the Belt Road Initiative, and they're striking deals. And those deals are mutually cooperative. We will come into your country, which is unindustrialized and third world, and we will help you pull your natural resources out of the ground. We will build railways and roads and maritime channels to help you deliver it. We will industrialize your country. We will enrich it, your country, and we want to cut. That's how business is done. Mutually respectful, mutually beneficial. We go in with a gun to someone's head and coercion and make them do things that they don't want to do, when China and this new growing union of countries is doing it a different way. They are doing it in a mutually cooperative way. And you know, I mentioned to you that we saw that first in 2023, late 2023, like in November, December, the first ever cross-border settlement for gold using the digital yuan. And remember, we've talked about the Belt Road Initiative for a very long time, right? What is it? It's 150 plus countries. Right now, 75% of human population, 50+% of global GDP and growing. And a lot of these countries are unindustrialized. So check this out. Chinese government just launched a new public blockchain infrastructure platform led by the Conflux network. The new platform, dubbed Ultra Large Scale Blockchain Infrastructure Platform for the Belt Road Initiative, aims to create a public blockchain infrastructure platform. This platform will be able to support the implementation of cross-border cooperation projects along the Belt Road Initiative. So you have 75% of human population right there. And all of the deals I have mentioned for years are being settled on the digital yuan, most of them, the contracts that are building out this infrastructure. Now they have the ability, once they've industrialized and pulled all the shit out of the ground and built the roads and the bridges and the railroads and the maritime channels, to pay for it all, going back and forth, sidestepping the SWIFT on a digital system like Project M Bridge, which cuts the West out completely and totally. And all of the pathways are connecting to the Brics pathways, like the north-south corridor that goes from like Iran to Russia or to India, past Russia, and out, instead of going through, you know, the Indian Ocean where you got the U.S. Navy. All of these things are being done, isolating the West. And if you see the little by little, the chessboard, little by little by little by little, look at all the pieces, infrastructure. Look at the 10 countries that have already signed on to BRICS. And one of the countries that has formally applied, I believe, is Sudan. And if you look at next to Egypt and Saudi Arabia and the United Arab Emirates and Iran, they have the entire Red Sea and Straits of Hormuz now covered, the entire thing. They have shipping lanes. They have relationships done mutually beneficially all over the world with the majority of human population. You have the president of Belarus calling for a summit to join the Shanghai Cooperation Organization. See that word cooperation? And the Eurasian Economic Union into the Brics. I've been saying that for 3 years. The SCO, which both Iran and Saudi Arabia have applied to. Iran is a full member. Saudi Arabia will be this year. They are a observant member last year, is the largest regional military and financial organization in the world. You put all these groups together with the Belt Road, you're talking.
What's your opinion on Schectman's point? Will gold have a consolidation phase, or will it continue to blast through new highs? Post your price prediction for gold and silver in the comments section and watch this video right here because it's a perfect fit for you.